Hey, everybody. Happy Friday to you. It's good to be here. My name is Brent Moores, and we're talking about advanced options. We're going to look at a couple different types of option strategies today. And hey, we're going to look at a couple different options examples as well. Glad you're here. Glad to be joined by James in the chat. Appreciate him. Just a reminder, you can follow us on X at Brent Moores CS, at James Boyd CS for additional content throughout the week. Now, we're going to get to this in just a minute. I want to talk about finding trades and then actually placing trades and, some of the aspects there that are key to that. Let me see if, let's just start off with the disclosures real quick, and then we'll get to the heart of the matter. Options do carry a high level of risk and are not suitable for all investors. And the material today is intended for general, informational, and educational purposes only. With long options, investors may lose 100% of the funds invested. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount, except on the paper money platform, which does not assign short options early. And that paper money platform, which we will be using today, by the way, is intended for educational purposes only. Let's see, all investing involves risks, including loss of principal. There's no guarantee the execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. And Schwab does not recommend the use of technical analysis as the sole means of investment research. As you're investing, as you're trading, looking for trades, there's different ways to do so. One of the principal ways that we do here in this webcast, and in most of our webcasts, is we look at technical analysis, especially as you're trading. Trading, I mean by that kind of shorter term on the market. And by that, I don't mean day trading necessarily. What I mean is, we're not holding this, most of these trades, we're not holding for a year or more. And we can't for most options trades that we do because we have an expiration date on those options. But there's some alternatives there for you. So this is the S&P 500. Let's just start with this. Hey, bullish day, market's up. The latest news is that the U.S. and Iran have in principle or in text agreed to some sort of deal. It's not finalized, of course. And, we'll see if that comes to fruition. I don't know. But the market's taking a more optimistic turn. SpaceX is trading. That was big news. And so this is where we are right now. But we had a nice bounce off that 50-day moving average, essentially, or pretty close to it at least. We'll see if we can break above the 20-day here, if that momentum can continue into next week. Part of that may depend on what the news comes out this weekend. So I'm going to take a little bit more of a bullish stance today in the market and with our individual trades, but just realize one of the beautiful things about options is they allow you a lot of flexibility in the type of outlook you have. If you find a stock that's kind of bearish, you can do an options trade that is kind of a bearish option trade. If you find a stock that is very bullish, you can do an option trade that is very bullish and everywhere in between. Okay. So there we go. But I'm going to take a little bit more of a bullish stance today. In other weeks, as you probably know, a lot of times we take a different posture in here. Of course, you can use any approach to finding stocks you want. Maybe you hear about them, in the news or whatever, and you want to pull it up. You can do that. One of the nice things in Thinkorswim, the Thinkorswim desktop software, is you can just use a watch list and pull it up, and you can narrow down the watch list. I mean, you could start off with the S&P 500 and scroll through 500 stocks. Probably not recommended. You probably want to narrow it down somehow, at the very least in terms of liquidity. But for example, here I have this scan or this watch list that's called bullish no earnings. Okay. How do you get these watch lists? Well, some watch lists are public watch lists. If you click on the name, here, look, if you're new, click on the plus sign down in the bottom left down here, and then add a gadget. You can add a watch list. When you go to your watch list, you can go to public watch lists. These are the ones that all of us have. Everybody has access to these. They're the same. Then you have the personal watch list that you've created. Okay. So you can use public watch lists. Fair enough. We're going to use, this is a personal watch list that I have. But you know what? I'm a giving person and I'm happy to share it with you. So this is just called bullish no earnings. Essentially, they're bullish stocks. We'll look at it in a sec, but that don't have earnings coming up in the next month, I think. 20 days, 20 trading days there. I'm going to put a link to that scan in the chat. If you're watching on a recording, it's in the description for the webcast. But here we go, and we can go through, and if you link the watch list, so by link I mean pick a color number combo here. It may look like this when you start out. I just have orange 7, doesn't matter what number you use, but just make sure it's the same as the chart, and then when you scroll through, it will change for you as you go through. Okay, so that's how you can do that. That's a very simple way to scroll through, pre-select some stocks that meet certain criteria that are gonna suit what your desire is here on this. All right, so this is bullish no earnings. Chris in the chat came in late, wants to know what the scan is. Bullish no earnings. Okay, we'll look at the scan here. The point is, this watch list didn't start as a watch list. Watch list started as a scan. You can start a watch list as a watch list, but then it's a static list of stocks. We don't want a static list of stocks because we want that list to meet the parameters of our scan. Well, let's take a look at the scan here. Bullish, that's not it. Let's see. A load scan query, and we call this bullish no earnings. Okay, so here are the guts of the scan here. Okay, it's using a previous scan. Okay, well, actually, I need to share my liquid stock scan as well here on this if I want for it to work for you guys. So I'm going to tweak this scan just a little bit, and I'm just going to use S&P 100 here. So let me go to public S&P 100, and I'm just tweaking the scan just a little bit because what I used was in this scan, and I just realized it was, I used another scan of mine, and that's a nice feature, by the way. Once you create a scan, you can embed a scan within a scan. You can embed a scan within a scan, and then you can do what you want. So I'm just going to do S&P 100 here. And I'm going to resave this here. So if you want to save a scan, here's how you do it. You go up here and you click on Save Scan Query. Bullish, no earnings, we'll say S&P 100. Okay, so I'm going to save that. And then what I'm going to do is I'm going to share that scan query with you. And bullish, no earnings. Okay, so we'll share, we'll do this. I'm going to put that in the chat for you. So use that latter one rather than the former one I sent. And I'll make sure I update the description on the webcast with the revised scan there. Okay, so here's the point though. The point is, as we look at this scan, it is looking for stocks that are above 1% above the 20-day moving average, 1% above, 5% above the 50-day moving average. So you can see how that would kind of give us an upward trend. A MACD that's going higher, a MACD histogram that's increasing, and does not have earnings in the next, I have 15 bars here. Okay, you can tweak that. Once you get the scan, feel free to tweak it here. So we don't have earnings imminent here on these in any case. But let me go back and let's just do this. So I'm going to go here and we're going to look at this. And you can see the results we're getting on this. Is this the kind of, are these looking relatively bullish? Everybody has a different opinion on this, but what I would say is when we're getting higher lows, that's generally bullish. Now, maybe this is kind of ascending triangle-ish on that. As we look at some of these others, here's Delta. Trend is up. We're above our moving averages. No earnings. CVS going up. CSX, nice little trend up. And so this opens yourself up to a bunch of different possibilities here. Okay, bunch of different possibilities in terms of trades. In this case, we're looking at a bullish trade. Well, so it's going to narrow down our universe of strategies that we're going to use to bullish. Well, you could buy stock. Well, that's not the subject of this class, so I'm not going to buy stock here today. We could do a long call. Well, long call is what we'd kind of consider more of a basic option strategy. I'm not going to do that today. There's certainly pros and cons to each of these strategies. But what I want to do is something that's pretty bullish. In fact, I'd say quite bullish, significantly bullish. I'm going to do a long synthetic on this as our first trade. Long synthetic, okay? And so what a long synthetic is it's an options trade where we buy a call and we sell a put, same expiration date, usually the same strike. And why do they call it a synthetic? They call it a synthetic because it looks a lot like a stock in a lot of ways. It's not a stock. Stocks don't have expiration dates, right? Stocks pay dividends. Synthetics don't pay dividends. So, but what it does do is it's very bullish. And when I say very bullish, what I mean is the delta on it is going to be pretty close to 100, which is the same delta as you'd get on a stock. Stock would be exactly 100 if you have 100 shares. This would be, we'll say, approximately 100. Okay. You're going to get downside, okay, significant downside risk if the stock goes, if the stock drops. The more the stock drops, the more the downside you get, the more loss you see. That's kind of like a stock, right? Do you see why we call it kind of synthetic or a substitute for stock? Okay. What about the Greeks? Well, one of the things about Greeks, one of the easy things about stocks is the Greeks, at least like Theta and Vega, for example, are really not a factor. There's no time decay with stocks. There's no implied volatility changes with stocks in terms of the Greek impact. Well, the Greeks are pretty close to, I'll say, zero here on these. It's not going to be exactly zero, but you have a long call, which is going to be negative theta. You have a short put, which is positive theta. They're going to largely cancel each other out. Same thing with Vega. It's going to largely cancel each other out. Again, synthetic. So let's take a look at an example of what this would look like here. We would only do this if we're bullish, right? This is going to be a substitute for the stock. The stock's about 100 shares of the stock would cost roughly $4,800. Let's look at CSX here. Okay, so I'm going to go out. I'm going to give us a little time. So this isn't, a lot of times when we're doing short options, short put vertical, short call vertical, covered call, just a short put, calendars, where we're dependent on time decay, where we're really trying to do time decay, butterfly spreads. We often target these kind of about a month out till expiration date for the reason that that's when the time decay is higher. But remember what we said about time decay here on this. It's not really a factor. So for the good or the ill, so I'm going to go out a little farther on this. We'll go out 70 days here. Okay? And I'm just going to kind of go out the money. We have 47.76 is the stock price. I'm going to go to 47.50 as the price there. Okay, so what I'm going to do here is I'm going to click on the ask price. I'm going to go same strike. I'm going to hold down the control key, sell the bid price, sell the call, sell the put, excuse me, buy the call, sell the put. And instead of the initial 4,800 approximate cost, our cost is about roughly 65 bucks. I'm not factoring commissions here on this, okay? So there we go. Now, what would this look like if I were to analyze this? Well, let's analyze it. Let's bring it to the risk profile. Take a look at it. We'll go to risk profile here and pull this up. And you can see there's our trade. Just make sure there's no other trades lingering there. That's an issue that I have quite a bit. As the stock goes up higher, things look good. Stock goes lower, things look bad. Okay, that's the same as like a stock in that regard. My delta. Is my delta exactly 1? No, my delta is not exactly 100 there on that. It's 100.02. Normally it's not going to be exact, that close probably, but it's right there, okay? And our theta is present, but very small, okay? Present, but very small. So we're losing a little time decay on this. I think our call option was a little bit more expensive. Well, it definitely was a little bit more expensive than our put option because it's costing us something. Sometimes these will end up as a credit transaction up front. If the short put has a higher premium than the long call, it'd be a credit up front. Long call is more expensive than the short put, a little bit of a debit. That's what we have in this case. And hence we have this theta that's a little bit negative. It's pretty small though, probably not a huge factor in this trade. The big factor is what the stock does. Our break even, 47.78. Where's our current price here? 47.78 is our break even. 47, that's basically where we're at, okay? That's basically where we're at. So, hold on one sec. Did I say that right? 47.77 is, yeah, according to this, let's see, I guess I have to get my dates right. 6/10, is today 6/10? Today's 6/12. I don't know why it doesn't, I wish it would just default to the current date on that. And we'll go to our expiration, August 22nd, and we'll set our break even. Clicked on the wrong one. We'll set our break even. Okay, break even 48.15, okay? 48.15. So what's the max loss on this? Well, the max loss is essentially if the stock goes to zero, okay? Big downside. So Sam says it's a big downside if the price goes low. Absolutely. That's why it's a bullish trade, right? It's the same, it's very similar. It's very similar to if you just buy a stock, okay? Now, in the chat, James pointed out, look, what if we go down here and buy another put at a lower price, and then we can cut out the difference there, okay? So imagine Sisyphus Happy says, why not just buy stock? This is why, okay? Our cost, $65 versus $4,700, $4,800, whatever there. So this is a leveraged trade. Yeah, okay? So this is leveraging the portfolio. Is leverage good? Well, if it works your way, leverage is great. If it works against you, leverage stinks, right? You bought a house at the peak of the housing bubble in 2007 with a big mortgage. Leverage probably wasn't that great for you at that point. But you know, you can think of a lot of circumstances where it's great. So if you want to take a more aggressive stance, this is the approach that you would take. This is not the approach necessarily. There's different approaches, but this is one possible approach that you would take. Okay, now concerns about the downside. How can we tweak this if we wanted to? So that's a synthetic. We can just do this. In fact, we could just put in an exit on this if we wanted to. We could say, look, if this stock goes down, we'll say breaks our trend, goes down to 45, we can put a trade to get out. We can put an exit order on this trade. No problem, absolutely we can do that. The other approach, well, there's probably more than one other approach, but another approach is we can go here, August 22nd, and I can go out and I can go, well, we'll go 42.50. It's going to cost us a little more because we're adding in another long transaction in here if I go to the 42.50 put. If I add that in, we go to the Analyze tab. Let's add in that 42.50 put. That's not the right expiration. 42.50 put. If I add that in, now all of a sudden my initial cost is up a little bit higher because it's not just that $65 debit, it's going to be $1.25 total. $125 for the contract debit. So my initial debit's more, but look what happens to my risk profile. Hold on one sec. Let me see if I can zoom this over. Okay. Oh, come on. There we go. You see? So now when we look at this, instead of this looking like this, it flattens out. So you can do it either way if you want to add that. The con of adding that extra put on there is our time decays. We're adding to our time decay, negative time decay, what that's working against us, and it's costing us a little bit more on the trade. Okay? So there we go. Now, if you don't want to do that, if you don't want to sacrifice the time decay on that, what we can do is we can just go to the original trade and we could say, I'm going to put in an opposite order on this. And I'm going to exit out of this if we break our trend, okay? Below our 20-day moving average, maybe down to where our prior low was. We'll go to about 44.50. We're just going to get out of this trade. I can right click, create an opposite order. This is going to get out of my position. And I'm going to make this a market order. Good till canceled. I'm going to click on my gear. It's going to bring up another window. And I'm going to bring over because it popped up on a different monitor I have. And I'm going to say, I want to get out of this if you just click on it, CSX marks less than, and we said 44.5. Those are two alternative ways of trying to help with the risk on the trade. Now, this, just like a stop order, although this technically isn't theoretically a stop, it's just an order condition to sell, but same with the stop. This doesn't guarantee any particular price of execution here on this, but it's functioning to try and help us with the risk there on there. Okay, so I'm going to confirm and send, and I'm going to put this in my synthetics bucket there. I'm going to send that. Okay, so there we go, and it just filled. So there's our trade. What about management on this? Well, management is this. When you're managing a long synthetic, think about what the purpose of the trade is. The purpose of the trade is to kind of mimic a stock, except at a more leveraged rate, so to speak. So we're going to manage it probably pretty significantly similar to how you're managing a stock. If you're doing a swing trade, you may have one. If you're doing a trend trade, could you even do this, a leap synthetic? If you want a long-term stock position, yeah, in that case, maybe you're looking more at, say, fundamentals or something like that. You can do that. One of the nice things is if you were to do leaps, and we talked about leaps a little bit last week in this webcast, but leaps are just long-term expiration options. One of the downsides of those leaps is, hey, there's a lot of time decay that can occur in these between when you enter the trade and if you hold on for a long, long time, because that theta, albeit probably slowly, is bleeding out of that the whole time. By doing the synthetic, instead of just like a leaps, you end up with a synthetics leaps versus just a long call leaps. You end up with a less time decay, significantly less time decay on that, to the point that it may not be that big of a factor there for you. So that's a trade. That's a bullish trade we did off of a particular watch list that we did. Now, of course, you can create other watch lists here. And I have other watch lists. They start with the scan. Okay. Let me show you a different one. I'm going to go to personal scans, and slightly different, I'm going to go to one that's MACD histogram momentum. This is intended to be a little bit more of a shorter term trade. And we're using different parameters. S&P 100, which I kind of did on my revised version of the other one, S&P 100. What is this one? MACD histogram, I'll show you an MACD histogram in a sec, is greater than it was. In other words, it's sloping upward. Okay, it's just a custom study. By the way, this scan isn't going to work on paper money. You need it has study filters. So you need your live platform to do that. Again, no earnings, coming up in the immediate future. Let me just see how immediate that immediate future is. I have 21 bars on that one. And a trend filter, okay, an upward trending study. So instead of even messing around with moving averages, which is kind of a common way to look at trend, this one is just using a particular indicator called the simple trend channel filter, okay? Uptrend, level max, okay? And so that's what that is. Let me go, and I'm going to share this with you. I'll put that in the chat. Not guaranteed for accuracy or timing on these. And I also have that one in the description of the webcast if you're watching a recording. Let me switch this up here. I'm going to go to personal, and I'm going to MACD histogram momentum. Okay, so here we go. Here's our list of stocks. And we can look at these, and we can look at them on a chart, and you can go from here on this. Okay, so what this is looking for is, if we look at a MACD histogram, I'm going to get rid of these moving averages for a sec, just to kind of clear out what we're looking at and make sure it's easy to see. This is a MACD histogram, and it can be used in different ways. One of the common ways of using it is as kind of a momentum indicator, okay? And basically, if it's sloping down, and you can see it's a histogram. There's all these little bars here, right? And if the bars are going down, whether they're green and getting lower or red and getting lower, we'd consider that to be more negative momentum there on this one. And if they're red and going higher or green and going higher, we'd consider that to be more of a bullish momentum there on that, okay? So what this is, as we look at this, is it's looking for it's just basically looking at the most recent MACD histogram. And I realize that it's kind of dark red, maybe a little harder to see than the green, but it's getting higher. It's going up. So we see this upward momentum here, and that's what we're looking for on terms of a bounce, okay? And you can go through and you can look at these. We got a stock split coming up on Honeywell. See that? You don't see that often on the chart, that purple line, that's what that is. And you can look through and you can see the upward momentum on these. Well, I'm just going to pull up here and I'm going to look at AMD. Now, of course, if I want to, and you can see the momentum shifting, it actually had a fair amount of downward momentum for a little while. There was a pretty significant pullback. Well, we've got to bounce, okay? We got to bounce. And so if we're going to be looking more bullish on this, we'd look for more of a bullish trade. Now, I don't want to repeat and do another synthetic. Let's do a different type of trade here. And for this one, what I'm going to do is I'm going to start with the vertical spread, okay? Just a long call vertical, and then we're going to tweak it just a little bit. But this is going to be a shorter term trade. My first trade, when we were looking at CSX, was meant to illustrate a little bit more of an intermediate term trade, I guess I would say. That's why we picked a 70-day expiration on that first one. Here, I'm just trying to ride that momentum up, okay? Now, it's an expensive stock. It's like a $515 stock. So I'm looking for it to go up closer to where our previous peak was. I'm not getting super bullish, but keep in mind, I mean, this stock's up 26 bucks today. This can move. And not only is that a big percentage, and AMD, as a lot of you are aware, is a tech stock, semiconductor stock that moves a high percentage. But in addition to the higher percentage, it's also an expensive stock. So from a dollar perspective, it moves quite a bit as well. But let's do this. Let me go, and just to start off, I'm going to go shorter term on this. And I'm just going to go out a couple weeks on this. And I'm just going to do just a long call vertical. So I'm going to just click on the 510 and buy the 510. We're going to sell a 520. Hold down the control key. And let's go, and let me just analyze this trade. Okay. Make sure I don't have anything else down there. I don't think I do. Nope. There we go. So this is what the trade looks like. Max gain about 510, max loss about 490, roughly equal, max gain, max loss. Our break even, let me just get this right. Get rid of this left-hand column. Our break even, July 27th, that works, is, clicked on the wrong one again, set slices, break even, is about we'll say 515. Okay, let me just jot that down so I don't forget. 515, and we said our max gain and max loss were both around 500 bucks. Okay? 500 bucks. Okay. All right. Now, let's do this here. Let's tweak it a little bit. Let's tweak this a little bit here. Let me just go back. And so we were looking at, what did we do? The 510, 520. And so comment on the spreads. For a 73.80 option and a 74.80, a dollar wide is actually, that's, a little over 1% difference between the two. That's actually not that, that would not cause me any concern there in terms of your bid-ask spread on those. Now, if it were a $10 option, these are expensive options and expensive stock, right? If it were a $10 option and we had $1 wide spreads, that would be a much bigger concern in my mind there on that. But let's go back here, okay? Let's diagonalize this a little bit, okay? Let's diagonalize this. So how do we do this? So what I'm going to do is I'm just going to take that short contract. I'm going to take that short contract and I'm going to tweak it here a little bit. I'm going to tweak that date, which is, so you're going to let me do that, or do I need to change? Let me just change this to custom. By the way, if you get stuck and it's like, well, I want to change it, but it's not going to let me change both of them, it makes you change because it views this as a vertical here. So it's not going to let me change the date if it's a vertical. But you can just go over here and click on custom. And then what you can do is you can say, well, I'm going to just pull this forward a little bit here. Let me go here on this. Okay, it's going to cost me a little more up front, no doubt. Where's my break even on this? Let me go to our first expiration, which is going to be June 19th. And we're going to set slices to break even on this. So our new break even's down at 494 essentially instead of 515. So this is certainly more forgiving in this sense. It's not super bullish in the sense that it's a little bit more neutral. We could easily shift up if we wanted to. We could make this 520, 530 if we wanted. And what would that do? It would just shift everything up. It's like a phase shift, okay, in math. It would just shift everything. I'm drawing it terribly, but it would just shift everything over to the right just a little bit on that, okay? So when you're doing this, start out with what you want. We start with a vertical. We shifted it to a diagonal. What about like max gain, max loss? How's that affected? Well, it's certainly going to affect it. Our loss is going to be significantly greater. Our max gain is now $1,300, but that's at a peak, a particular peak. Okay, so its odds of hitting that are pretty slim. Max loss can get pretty significant, $1,300, maybe, 1,500 is the total max loss. That would take a pretty big drop down to get there, but theoretically, it's there. So you just got to think about pros and cons of this trade here. Let me just throw in a price slice. In terms of time decay, our theta is pretty significantly positive. Because, why is that? Because our short contract is at a period closer to expiration, okay? This is closer to expiration than this one. Therefore, the theta is greater. Well, the theta is helping us out on the short contract. It hurts us on the long contract. But because it's a greater rate on the one that's closer to expiration, we end up with this positive theta. That's a significant, it's not just a small positive theta, that's a significant positive theta there. Positive vega at the same time. So preferably implied volatilities go up there on that, okay? So that's the trade. Now, ways we can tweak it. As I mentioned already, you can look to shift those strikes higher if you want to make it more bullish. No problem. It's not a right or wrong. It's just going to come out to your forecast. The way we have it right now, it's a little bit more of a neutral trade. But we did, let's see, we made the 510. Let me just get rid of that drawing. We made that 510, the 520 contract to June 18th. Okay. So let's go back here, and we were going to make that. Again, I'm going to do the same thing, make it custom. I'm going to make this June 18th. And then if we want to make it more bullish, maybe we make this 520, make this 530, but I'm going to leave it as is right now. And I'm going to just shift this over a little bit, and I'm going to confirm and send. And I'm going to put this in it's a diagonal, my diagonal bucket there, okay? All right, now this is a short trade. And when I short, I mean short term till expiration here on this trade on this guy. Let me go if we can bring this up here. This is AMD. So we're starting out with only 6 days to go to expiration. A lot of times at diagonals, when we get to like a week to go to expiration, we just get out at that point. In this case, because we're starting with such a short time till expiration, we'll look to get out. As long as it stays bullish, we can hold on. Probably not all the way to the very end. Okay, we're probably still going to get out a couple days before expiration on that. Okay, so here's what I want to do. I want to summarize and just let you know some next steps here for you. I think this is a great platform, this Thinkorswim platform. There's others out there you can use as well, but I think using the risk profile tool can help you visualize these trades fairly easily. And we have a lot of education regarding using this platform. James teaches some of that. James uses the Thinkorswim desktop software every time he teaches an Investing Masters class, okay? His Investing Master Series. It's Tuesdays, 11 o'clock Eastern Time. I encourage you to check that out. And others. We have a whole bunch of webcasts on the Trader Talks channel. Trader Talks Schwab. Just subscribe to it. If you like what we did today, you'd be doing me a favor if you clicked on the like and subscribe. It's just a little thumbs up on the bottom of the screen. We'd appreciate that. Now, what did we talk about? We talked about a couple different approaches to finding bullish trades this time. In future webcasts, we'll tackle neutral and bearish and other types of trades as well. But today was bullish day, so to speak. We talked about synthetics and long synthetics, and we talked about diagonals, starting with the vertical and kind of converting it to a diagonal. Everybody have a wonderful weekend. Coming up next, we've got market and sector analysis. I'll actually be teaching that one as well. So encourage you to join me for that. We'll take a different topic, but we'll take a look at the markets here coming up. Thanks for joining me, everybody. Thank you, James, for helping me out. And we'll see you all next week. Bye-bye.